please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Mahindra Irani is with us, MD and CEO of Genie Gems Consultants.
I wanted to ask you on the auto sales that came out for M&M. I mean, this time 45,000 units is what they did. It's much lower than the average that they've done over the last many months. Last month was 46, the month before that was 48, and then 62. So you think somewhere there is some problems still in the auto segment for M&M?
UV sales, if that is what you are asking, I think that is definitely a little bit of a concern. But 3 launches are coming. Hopefully, that should possibly take care of it. In fact, by default, I would say Tata Motors has gone ahead of Mahindra and Mahindra after Maruti and Hyundai. But having said that, the fact of the strategy which they have announced, the body language, I would say, of the management, I think makes me feel that over the next 2, 3, 4 quarters, I think M&M virtually should stand out, and possibly the thrust on lesser than 120 horsepower tractors for the overseas market, something in which it was not present so far, trying to launch some new products outside tractors in the agricultural machinery segment. All these things ultimately should augur well, and the valuations at which it is, I would say 17 times if you give FY20 earnings, you get a price plus the valuation of subsidiaries, an easy 1140, 1150 looks possible on the card over the next 2, 3 quarters in a market in which protecting money is very important, and one doesn't know whether one will be successful in protecting money, looking at the way the global markets are right now.
Okay. What about auto ancillaries, Meherboon? I mean, the poster boy of non-performance in the stock market has been Motherson Sumi. But is there where you would hunt for value?
I knew that was coming there as far as the name Motherson Sumi goes. I think the way the stock has performed, completely underperformed. Companies of lower irk, virtually you can't compare. Mahindra is Motherson is Motherson. At the end of it all, looking at the way it is and looking at the way possibly Trump is sounding as rhetoric as far as taxation goes, I think the market has possibly discounted all possible negatives in the present price. So Motherson Sumi would be one more stock which you buy because it's a good company, like maybe an Ambuja or Bharat Electronics, which I mentioned earlier. You buy. Don't try to find reasons as to why it will go up in a hurry. Just buy knowing that most of the negatives now could be in the price. But since you mentioned auto ancillary, another interesting name which I have liked, which with a clear disclosure, all the names which I'm mentioning, I think you should assume that I'm advising my investors, is Mahindra CIE. Another Mahindra group company, a clear MNC, if you ask me, with a 51% held by CIE and local promoters holding around 20 to 23%. I think going at a valuation which is nearly 40–50% lower than what a WAPCO or maybe something like a Bosch is going at. I'm not trying to say that Mahindra CIE deserves a higher valuation. Maybe WAPCO or Bosch should possibly come down relatively. But at the end of it all, at the present level, looking at the way the company is performing, I think the stock can only go one way, and that is up. Maybe a 5–10% correction in the short term, I'm not ruling out. But there was a block deal which was interesting last week, which one needs to find out actually who the buyer was.
So yeah, that's of course interesting. You know, we're discussing who the Cavani of the market could be. What about the Mbappe of the market? 19 years old. And you know, Twitter was discussing what were you doing at 19. I think I remember, you know, in college with no idea, just, you know, roaming around on my bike, had no purpose in life, and here's a 19-year-old who's now the most expensive footballer. But I mean, the point I'm asking is anything which is really looking interesting, which could become the big stock from here.
I would say a name which I mentioned earlier, Sterlite Technologies. A price of 410 from a low of 120. I have been recommending this stock on your channel quite often over the last 2 years. 120 becoming 410. Would I have sold the stock at 400? Answer is no. Now you are giving it back to me at 270. I think the stock deserves a price of 400 at least over the next 12 to 18 months, and maybe higher. So at 270, if I don't mind another 20 rupees drop for whatever reason, I think the stock should give me at least a 60–70% return over the next 12 to 18 months. So those are the type of stocks which I am looking at. Stocks which have come down sharply for no fault of theirs, just because they went up and people are reducing their positions in the market because of losses they are suffering in the F&O positions. There is an impact of virtually in most mid-cap and small-cap scripts. I think certain stocks can come down very sharply for no fault of them. At 270, I personally believe a 20 rupees downside and 130 rupees upside. which I think should come over the next 12 to 18 months, makes me feel that Sterlite could be absolutely a dark horse in this market, which one should possibly be buying into. Because, as I mentioned earlier, what you need to look at in this market is, when I'm buying a stock, will it fall further and how much will it fall, and will it go back to the levels from which it came down? I think Sterlite certainly belongs to that category.
Okay, well, with that, we have to shift focus to the early morning rates. It's very flat, but it's importantly green. Let's see if it holds. That's what we should be looking at. Tata Steel is starting with a decent amount of gains, but we will have to see whether it can hold on. Ashwini was pointing out it has fallen enough, and therefore technically maybe the market is in a good spot to receive the news. Up 3% now. Tata Motors is also up 3.2%. Titan is doing well after the fall it saw, after the overhang of the sale is over. So Titan second day running doing exceptionally well. L&T is up, but let's wait and see how things pan out from here on. I would assume the oil marketing companies will still be in a spot of bother. Vedanta is down. Credit Suisse has also cut their estimates for the stock. The rupee has opened very, very flat. So no negative cues at least coming in from there.
Okay, well, some more stocks that you'd want to look at. Titan, there was a Morgan Stanley upgrade. So Titan is actually moving with some ferocity on the upside this morning, up almost 1%. The auto stocks, so M&M is up in the green, up 1.5%. Good numbers there. Tata Motors had a good showing as well. So that stock is up almost about 3% odd. Mehrabun, before we let you go, just a quick word on Royal Enfield sales, which, have been lagging for a while. I wanted your thoughts on whether you expect more underperformance from Eicher Motors?
Well, relatively, answer would be yes. Since you mentioned underperformance, answer would be yes. For the simple reason, the stock is absolutely, on an absolute basis also, it's overvalued. The point is, which has gone in favor of Eicher Motors as a stock, is that people don't like to sell off in a hurry. Same applies to maybe something like a Bosch, same applies to something like an MRF in the auto ancillary segment. But at the moment, I think with the underperformance which is seen, and if it continues for the next maybe 1 to 3 months, it's distinctly possible the stock could shed some weight, especially knowing that some competition could come its way. So I think at the present level, Eicher Motors is not a stock which I would possibly look at or by making a fresh entry into it. But I would definitely endorse the view of a lot of investors in Eicher Motors, which has given excellent returns over the years, that if they want to continue to hold, they better hold, because it's not easy, honestly, Sonia, to go and sell off a stock like Eicher Motors in a hurry.
Right. Everyone, thanks a lot for joining us today. That's some fundamental view. Udin Mukherjee is also with us. Udin, good morning. Let's discuss a bit of sports first, right? We just discussing World Cup with Mehrabun, both Ronaldo and Messi out, and the new order, right? Mbappe, and of course, you in the past have had good connection with French team, with Arsenal. So many French players playing for Arsenal. Your thoughts on how that team is looking, and who's your favorite now?
Morning, Anuj. I think the Belgium-Brazil match will throw up the winner of this World Cup. If Brazil make it past Mexico today. It's, in my mind, it's been the worst World Cup that I've seen in the last 20 years. The quality of football has been appalling. 4 of the big teams are already out. So it's high time that we had some dark horse actually winning the World Cup. But even last night, I mean, you were falling asleep watching Spain play, and I don't remember Spain playing this quality of football. So I don't know about which horse to bet on right now, but the quality of football has just been absolutely appalling.
Well, maybe the quality of football has been appalling, but it's been such an interesting World Cup, right? I mean, the script has entirely changed this time, Udyan. Whoever you're betting on doesn't seem to be emerging as a winner at all. And that's fun, right?
Well, if you don't have to watch and you're just reading the scores in the morning, it is fun. But to go through 2 hours of what we saw last night, and Argentina and Germany, I mean, it's just excruciating for me.
Okay, yeah, I guess the Spain match was particularly so. I didn't watch the Germany match so much, so maybe I was spared some blushes there or spared some disappointment, but Spain, yes. Then we have to speak about the market as well. Things turning for the market as well. Do you think that, there's too much talk about emerging market outflows. Are we in for a bad spot, or do you think that we will get supported at 10,500 thereabouts?
Lata, I think we have difficulties ahead for the market. I don't know about the index, but it's possible that we are already in a stealth bear market and the index is misleading us. You know, the Nifty is up 2% for the year, which says that it's a flat year, and after a great 2017, what's wrong with a flat year? But the mid-cap and small-cap indices since the start of the year, and particularly measured since the day of the budget, is down between 15 and 20%. So they are already qualifying. If you look at the CNX 500, you'll find that most stocks are getting into that zone where you would say they've fallen nearly 20% and qualifying for some kind of a bear grip. It's not an outright bear market yet, clearly, but I think there are parts of the market, large parts of the market, which are in a stealth bear market already. The market's only been held up by mutual fund flows, and they have been diminishing for the last 3 months. Let's see what the June number is like. But I think we are now getting to an average of 6,000–7,000 crores of net inflows from mutual funds. If that number starts to slip, if SIPs for some reason start to slip up, I think this market has a whole lot of downside from here, because you can rattle off 10 negative triggers and probably just about 2 positive triggers going for the market at this point in time.
You know, I take your point on bear market trades, at least in the broader market, Udayan, but on the large cap index, 3 or 4 stocks, the HDFC Twins, TCS, Reliance, have been holding the market. So what happens now if there's a mean reversion? Do you think the large caps also fall, or you know, mid caps start to see some bit of rally from here? Because it just cannot go on for too long, right? That the index stays flat while there's a lot of distribution in mid caps.
Well, that's the most interesting question right now, Anuj, frankly, because if you look at the Nifty's composition, I mean, that's very interesting. You highlighted some of it. But I think there is one clear trend which is playing out, which is that people just want to protect their money, as your previous guest was talking about. And their way of protecting money is to either be in exporters or to be in ultra high quality names. They do not want to buy anything else. So the IT index inside the Nifty accounts for about 13% weightage. If you look at 5 other stocks outside of IT, which is the HDFC Twins, Kotak and IndusInd, the 2 private banks, and HUL, which is all ultra high quality as we know, these 5 plus the 4 IT stocks account for 40% of the Nifty. Now 40% of the Nifty is high quality plus exporters, and that is where the money is going, the SIP money, etc., and preventing the market from coming down. Which is why you're still 10,700 Nifty, which is not too bad. You're up for the year, but the carnage is happening underneath that. So you could have a situation for a long while where the Nifty still gives you the illusion of a range-bound market, 10,000 to 11,000, but the real damage is happening at the portfolio level.
Then, you know, one of the big stocks that fell last week was ICICI Bank. I mean, it was down 10%. And now we know that GC Chaturvedi would be the new non-executive chairman. Of course, he is a former bureaucrat. He has been in the board of a lot of state-owned banks, etc. But do you think this appointment will allay concerns of the investors, the regulators, etc.?
I don't think so. But it's maybe a good thing that they have changed the chairman, because the last one did not exactly conduct himself in a great fashion around the Chanda Kochar controversy. But, you know, if these reports, and we spoke last time I was here about ICICI Bank and how maybe the stock is bottoming out now, and subsequently you hear about stories of window dressing, etc. We don't know what is true and what will come out. But if we think that one ornamental non-executive chairman at the top will actually sort out all decision making and window dressing in ICICI Bank, that's not going to happen. You need a management rehaul, you need a very strong board out there, and you need to make public all the issues which are haunting the stock right now, including these allegations of window dressing. So I think the stock might probably hold a range 250 to 300 for a while now and be volatile depending on what kind of disclosures come out. I still think it's the last innings of pain, but we need this bad news out and this suspicion which is hanging over the stock restricting its valuation today.
Absolutely, but I guess it's getting bailed out by its subsidiaries. I mean, the insurance company and all that, adding to the value of the stock. So it's not falling below that 280 mark too much. But speaking about banks, I guess it's the IDBI deal that you know, is perhaps a bigger shocker in terms of governance standards. The IRDA permission came surprisingly easily. What are your thoughts?
Well, you said it, Lata. You used the word shocker. I mean, what more can one add to that? It is completely a shocker. But we shouldn't be surprised, right? I mean, we've seen, I mean, down the years, so much of public money being wasted, either directly by the government or through institutions or companies owned by the government. And I think this is an important, I don't think IDBI Bank can be turned around by LIC. I mean, the rot goes far deeper. It's really wishful to think that an LIC pumping in 10,000 crores will change anything at the bank. I mean, we've seen what happened with the last round of recapitalization, which everybody was talking about, a miracle and a game changer for the Indian economy. That money has gone down the drain and nobody's asking any questions. Exactly the same will happen with IDBI Bank. But you know, there is a broader lesson in all of this. I think for investors, the lesson should be stay away from public sector stocks, because at any moment, the government can just, through a phone call, make you take a capital allocation decision which goes against your every interest. It happened with oil companies, it happens with power companies, it happens with pretty much everything. Banks that the government owns. So the government is hell-bent on destroying its own balance sheet and destroying the balance sheet of every public sector company that it holds a majority stake in. And that I think should be the important takeaway. Stay away from PSUs. Do not buy them because they will destroy wealth over a period of time.
Okay, then stay on. Bajaj Auto sales higher than estimate, 4 lakh units is what we have. We'll analyze that as well. But pre-open has settled, 18 points higher on the Nifty. Bank Nifty is flat, and once again, mid caps are doing well for second day running, at least for starters. Ashwini, what's the trade here, and what's your 9-10 call?
See, I was looking at Ashok Leyland and Maruti, and if numbers are, even half decent, Maruti is at 200-day moving average, and Ashok Leyland, it's plunged. So from there, getting a nice 4-5% rally may not be out of ordinary. Tata Steel we've already spoken of, that could show you upside. But 9-14 call, possibly you get into a Bata, because Bata has worked well even last week. So that's a buy with a stop of 850, target of 870. And overall on the indices, I don't think you want to do too much. Bank Nifty, if I get a 50-100 point decline for some reason, maybe I want to buy. But Nifty opening up 35 points does not give you lots of opportunity.
Okay, thanks for that, Ashwini. But we must get to the Bajaj Auto numbers. This is the second month of surprisingly strong numbers.
Yes, good numbers coming in, better than street estimates. And if you look at the trend, the graph is up for you. Last 3 months, they've been doing 4 lakh plus units. And actually, the recovery has come in exports. Exports is firing really well the last few months.
But
so 44%
not bad
growth.
Either.
Yeah, domestic is not bad either. But, if you remember, there were a lot of problems in markets like Egypt, Nigeria, etc. That has completely been resolved, and really it's exports that have been supporting Bajaj Auto. So that stock doing pretty well. Udin, before the market opens, I wanted your quick thoughts on Tata Steel and that whole deal with ThyssenKrupp now out of the way. How does one approach that stock?
That news is good, Sonia, though it's not new news. I mean, it came a few months back. Now it's got an official seal. It reduces debt by about $3 billion or 20,000 crores, which is good news for Tata Steel. Maybe there will be some synergy benefits once they actually start operating on the ground. But the problem is not with this. The two big headwinds for Tata Steel are A, how much they're still paying for the domestic acquisition which they're doing of Bhushan, and that will tear down their balance sheet once again. And B, the bigger question is what is happening with the commodity cycle right now? Is it turning? Are the signs from China ominous once again? And I think that is why the stock is languishing and many of the other metal stocks are falling. Metal stocks actually do well only in a rising metal cycle. And if that cycle is under threat right now, coinciding with an emerging market difficult spot, then I think Tata Steel will struggle. And the price is telling you that. In July 2017, the stock was 550. It went up to 750 and the stock is back at 550. So actually 1 year out, you've not made money on Tata Steel. And if the news from China continues and the yuan continue to be difficult, then I think Tata Steel will continue to struggle to perform despite a small bounce back because of this news.
Oh yes, and the street remembers last time Tata Steel made a big acquisition, Chorus was actually the end of the cycle. So that also is something which has been bothering.
Well, I don't know. This is not a cycle acquisition. This is, a distressed
we'll know with
sale.
hindsight.
Yeah, we don't know.
Yeah.
We'll have to really wait and see. We'll have to really wait and see. This is a distressed asset purchase.